Hi everyone. Hope you're doing well and welcome to the Wednesday Zoom. And I see a couple, some familiar face in here, Scott and Calvin. And thanks for joining us. And uh, and it's kind of last minute. I apologize. Was, in between the talking to the broker and trying to get this deal going and with my investors. And I just want to do a quick Zoom call. And I think this is fantastic time because look at the weather out there is so nice. And I'm sitting in the backyard. I'm still actually in quarantine. Just so you guys know, I came back on last Friday. Went to a trip in US and for business and submit an offer and come back on Friday and have to stay in the hotel for quarantine for 3 days. And after that I was out on Monday, and I'm just doing this Zoom call with all you guys. And I have some great news to share, and as I said on email, so thank you so much for coming to um, to uh, to this Zoom call. I have some great news to share, and it's something about the market in US. And for apartment investors, that's a it's a very exciting time. I don't want to keep it too long for this one because I actually didn't prepare the slide deck, but I really just want to give you an update where we at the last week, and what's the markets look like. Um, so um, so we in the management team, myself and we walk the property and we submit our offers. But basically, this is what we find. We've been talking to brokers, different locations, and its various place, um, in Midwest, in Detroit, and in hi Kelly, and in even southern market like Texas, Memphis, you know, even in some on the closest areas like Florida, San Jose, Boston. So we learn a lot on what is going to be happening. We think as a apartment investor, and it's actually very exciting times. When I sent an email to you guys this morning, talk about 1.7 trillions coming to apartments. So some of you guys probably ignore my email and think that's exaggerations. The 1.7 trillions actually come from one of the research group in the U.S. is talking about how the pandemic has actually made most of the investors, most of the household in the U.S. have becomes that much richer. Because they didn't spend the money on go outside to travel, they didn't spend the money on vacation, they spend the money on save a lot of money on staying at home and didn't eat out and all that. So the net worth increase of last year in America is 1.7 trillion with 12 zeros, trillions of net worth increase on the, hi Dave and hi Kelly. So I know you guys muting the call, but it's 1.7 trillion increase on net worth on household money because of the real estate have appreciated 10%, 9% some of the market, Ohio 10%, over the board in the US and some of the market in Canada. Just so much appreciations of the net worth of 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 the money sitting and equity in the bank and in your home. In fact, I was receiving one post. I actually saw one post from my good investors, Hillary. She posted in Canada, there's something called home equity tax coming in. Trudeau government spent a quarter millions to a UBC professor to look at that. So when government spend that much money, looking at the feasibilities, feasibility, and I think the group that's doing this is a really ironic name, and it's called Generation Squeeze. You got the name Squeeze of the next generation on the millennial or the younger generation X or whatever. So talk about how basically long story short, they're looking at how much tax money they can tax as a home investor, you and I, to basically get some of the tax money for, because they have to pay for, of course, Trudeau government spend I think it's like between 200 to 400 billion. U.S. part government print a trillion, and now they are of course printing another 2 trillion, 1.9 trillion to support the economy. So between a 1.7 trillion net worth increase and 1.9 trillion they're going to print, there's so much zeros. So sorry about that. Some money had to go somewhere. And what I want to report to you with the trip that I just went this last week, and it's what I find is, so, and I give you another stat. We talk about another stat. I'm so sorry that I didn't have slides here today. And the stat is, there is 10%. So let me pull this out. Actually, I printed out yesterday, just before the meeting. So this is my property package. You guys feel free to ask me information if you guys want to get cash flow 7% and 18%, 7% cash flow and 18% return annually. I think it's a very good investment, but that's why I put in an offer, and we're going to compete with them, and we have strong. So this is the diagram I want to show you guys. A lot of you guys, like engineer like me, are all about numbers, right? All about numbers. So this is the apartment, the number of billions that was invested. So this from here is 2008. 2008 is a green bar on your diagram here. So go up during the last recessions, and here, boom, we saw about 40% decrease of money going into the apartment buildings. And so in fact, this is not what I see. What I see in my market is actually about 10% of the money were only deployed in my market. So let's say that they have 100 deals closing in the property that we were investing. So there's only one deal. So let's say 100 deals closing in last time, and now they have one deal that's closing, and in 2020. So what it tells me, I'm still gonna get the paper again. Hi, Michael. And what it tells me is this year. Hi, everyone. Welcome to the Zoom call. So what it's telling me is based on this diagram. So whatever they slowed down last year in 2020, they have to catch up right here. And this is what the CBRE report. So this is from the world largest broker, CBRE. You want to see where you can see it. So CBRE, yeah, right here, CBRE US research. Talk about multifamily, and they, from what I see, maybe not this year, but a lot of money is going to be needing to put to the apartment investment. And already seeing multiple offers competing in the market that is never got held off. And in 2021 and then going to 2022, I have this saying, and I was always talk to investors that has been in the market for a long time. They're telling me, the cap rate is going to compress. For the rest of you guys, what that means, it means the appreciation is coming. And, hi, Michael, hi, David, and I see a lot of, hi, Charlene. So what that means is apartment, real estate, commercials, the saver bet that we talk about in the spectrum. We talk about all the way from industrial apartments next, medical offices next, data centers next. Then before all this hotel is going to be recovered, a lot of hotels need to be safe, a lot of offices need to be safe. And what we're looking at as this chart, as apartment investors, is never deviate from the market trend. So we, on the last projects, we got in right here around that time, and we're really grateful that we're able to ride the wave, so called. What I'm telling you guys is, if the coronavirus didn't kill apartment investment, we actually have 100% on our C-class property, and we're going in another C-class property. If the coronavirus didn't kill the apartment investment, and if the coronavirus actually give 10% increase on most U.S. real estate market and add 1.7 trillion on the net worth of every homeowners. So think about what this 1.9 trillion is going to do. think about the 1.7 net worth is going to do. Think about other investors. So we are doing multiple offers in market that is very very there's a lot of money chasing in the apartments market just simply, and that's why we're able to give our investors really good return. We're able to give investors 7% and 18% and upwards on the refi. So enough about the market update. So this is one of the top investment that we talk about. We already put it on the market, and we want to invest with someone like you guys. And I already told you guys I just come back from quarantine, and I'll be happy to talk to each one of you guys if you guys have more questions about the market, what we're going into. But we talk about a market that is going to be very bullish. Dow Jones in terms of the stock market, in terms of real estate market, you're going to see a lot of appreciation just because of the stupid amount of money that we have been printed, and the loan interest is staying low. There's going to be a little bit upside. There's going to be, you already see this already, like the treasury loan from treasury percent from 0.6% to 1.6% in the last 6 months. Appreciate a lot. And so what we are seeing is the rate will continue to go up, which have upward pressures on real estate. But that's nowhere and be able to counter, offset, whatever you like to say, kind of offset with the effect of the money that they have been printed on the market. And all this money has to go to the stock market. All this capital has to go to real estate market. All this market has to go to commercial real estate market. And so I just encourage you guys, you guys need to do the research for your own investment. Whatever the market you're in, you have to do your proper research. But I do my proper research, and that's why I also invest with my own investors. Is my Facebook stick is keep dropping. So, but this is what we're looking in the market. It's a very, very aggressive market. And if looking at, again, if history have teach us anything, looking at apartment investment in 2008, and then what happened from 2008 onward, the next 5 years, apartments actually from next 2008 all the way to 2019, 20, even the coronavirus hit, the pricing on the apartments have actually never really actually go up. The cap rate has never go up, meaning the price have been steady and going up. So it's one of the reasons why I'm so bullish in apartment investments. It's one of the reason why it goes to, even in this market, I have to quarantine and come back. So I literally double the cost of the trip that when I go to the US and come back and stay in hotel for 3 days. And I'm still in quarantine, by the way. I'm still in home, and this is the only place that I can go as far as the next 12 days or so. I have to stay at home. But so yeah, send me emails if you guys want more about, if you guys want to invest, let me know. If you guys want to hear about opportunities, let me know. So this is what we're looking at, 54 units, and we're at the last stretch of the raising. So we are looking for people we can partner, or even if you want to learn about how to invest, how to start investing in market. Some of the people come to my groups just to want to learn about and do it. They like me, they roll the roll up the sleeves and want to do it. So connect to me. I'm always here to share what I know in the market that I'm active in. Yeah, so just send me email, call me, or my email is Hay2Brick, Howard@Hay2Brick at gmail, at Hay2Brick at Howard@Hay2Brick.com. Sorry. And just call me and reach out and say hi. And I would love to share what I know. A lot of investors in Vancouver and Toronto is actually coming to me. It's like the market price in those markets is just too high. There's no way that you can, the market either has to keep going up, magically, or you're gonna basically sacrifice on your cash flow. So the return on your rental income doesn't even pay the mortgage. And that's why we invest in market that can actually pay the expense of the properties, pay the investors, pay the loan, and we able to refinance and invest with investors. So we continue to look for those market, Midwest market. And so thank you so much for chiming in and come. And you guys want to connect or send me a quick test on the checkbox. I'm happy to answer your questions. Otherwise, and looking forward to connect with you. And thank you so much. And during my emails, I know some of you guys didn't intend, and maybe that's not what you're thinking in this time pandemic. I respect that. But guys like us, we always want to work with investors. We are humble and we want to work with you guys. If there's something that you want to hear from us, or we can help if you guys connect to us at Hay2Brick.com. So check us out. Thank you so much, everyone, and thank you, Michael. Thank you. And yeah, so so type it on the chat box if you have any questions. Thanks again, Kelly, and really appreciate that. And yeah, talk soon. Nice to see you guys happy. And hey, we just want to go back to normal, right? And I just want to go back to normal. You know, I do think we're going to get back to normal very soon, and I hope that you know, I'll be the first one to put a jab on my arms so that I can travel without quarantine. I know they're talking about it. I know that's risk, but you got to do what you got to do. So for yourself, for your family, and for your investors, for your future. So again, thank you. I appreciate that for coming in, and hope you guys are as well and stay safe. I know some of you guys trying to say something. I'm sorry, I can't hear you. and and a good future. And the 2021 will be fantastically awesome. Ciao, guys. Bye bye. Bye, Harry. I love you guys. Smile. Thank you. Thank you, David. Okay. Bye bye, guys. Thank you. Bye bye, Shine.